What's going on, you guys? So I'm going to do a little bit of a Sunday market outlook. I'm going to look at the pairs that I generally look at, kind of look at some setups that I'm looking to take, and then also look at the news that's coming out for the rest of the week. So jumping right into this, right now I'm starting to look at the US dollar currency index. This is the DXY, and this is generally speaking, it is just a picture of how strong or weak the US dollar is. So we could see that for quite some time, the US dollar was really just moving to the upside. And recently, we started moving to the downside. And right now, we're kind of in a consolidation phase. You could see that we have been moving in a channel. And it's really just waiting to see if this market is either going to move to the upside or the downside. Now, we have to keep in mind that this is the daily time frame, so just this little move from here to here is a lot. That's a big push to the upside or the downside. You can tell just by the candles that it really takes some time for it to get from here to here. What is this? So this is February 3rd to March 8th. So this is 30 days to get to this upside here. So just to go from here to here, it's going to take some time. But with that being said, we still need to understand what direction it's moving because it's going to play a big part in the trades that we decide to take ourselves. So if we look at the moving averages, we got the 20 and the 50. The 20 is the blue line and the 50 is the red line. We could see that recently we got a cross, and that was this push to the upside. And it looks like that we might be coming into another cross over here. If we do get this cross over here, what that's going to tell me is that the DXY wants to continue moving down. Now, if the DXY continues moving down, that's pretty good for our indices. We have been looking at the indices, and for the last 2 weeks, we were looking to take short setups. But towards the middle end of last week, we were starting to get into some long positions. So kind of depending on what the DXY does here, that'll dictate somewhat of what positions we get into when it comes to things like EURUSD, USD JPY, gold, XAU USD, the NAS 100, and the S&P 500. It's not going to play too much into GBP CAD, but it is important to look at for basically everything else I trade. So we can see that we've kind of formed somewhat of a trend line here. So we might start to push up slightly. And if we do, we might go short side. But if we break this trend line here, and even if we break this low here and start to move down this way, I mean, really, it's a no-brainer. I'm going to be looking for shorts in the market when it comes to the U.S. dollar. Looking at the RSI, we are below this 50, and it does look like we might start to get a cross here. You can see back here when we got this cross, we did push to the upside for quite some time. That's this move here. And then when we got this cross over here, we did push to the downside, and that's this move here. So I talked about this last week. The RSI isn't a tell-all, but what the RSI does give me a look into is it gives me an idea that if we do get a cross on the RSI, we will potentially move significantly to one side or the other. So it looks like we might get a cross here, which we might end up pushing to the upside. But if we don't get that cross, if we just get a bounce off this moving average, we could continue to move to the downside. And if we do start to get oversold, then I will be looking to potentially trade into the oversold. So if we get into oversold, what that's going to tell me is that price does want to start to come back up a little bit. It's called a pullback. And then we'll get into some pullbacks, which means that we might go short side on NASDAQ, S&P 500, and then, we'll continue to sell off on this thing because our next zone, our next zone is down here. So if we push down past this, we could come all the way down to here. And then after that, we got somewhat of a line here. So we could push down even further if we break this zone. So that's what I'm looking at on DXY. Really, we just have to see how this reacts off this trend. Like I said, if we do get somewhat of a break over here and break to this downside, more than likely we're going to continue to push to the downside, and we'll continue going long on the indices. So let's get into the NASDAQ. The NASDAQ had a fantastic end of the week last week. Let me drop this down to the 4 hour. So if you look at Friday, I mean, we just pushed. We pushed all day long on Friday, between Thursday and Friday. And right now, what we're looking at is the start of a pullback on Sunday. So, like always, we're going to draw our fib. Because we're looking to get into longs, we're going to draw our fib from the swing low to the swing high. You can see that RSI is obviously overbought over here, so that tells us that we do want to get into somewhat of a pullback. Now, where do we want to get into long positions at this pullback? Well, let's take a look. If we draw a box at our 50, that's a pretty strong area of resistance over here that we had broken through. If we draw at the 38.2, there's not a lot of price action. We do have a little bit of price action over here. This big resistance candle over here, and we did play off of it a little bit, but it wasn't anything crazy. And then the J1, the 61.8, we're kind of trading in the middle of price here. So for me, this J2 entry, this 50%, I think is going to be my best setup. So if we can get back down here to this 50, I'm going to look to go long here. Stops just below this 61.8, and then our target's going to be at the top of this fib here. So we have an 898 pips stop loss, which if you're not familiar with indices, they move quite a bit more than just a standard Forex pair. So if you dropped, let's just say you dropped a 0.1, which is $1 per pip, you're going to lose $898 if this hits stop loss. But on the other side of things, our take profit is 3,452 pips. So if you dropped $1 trade, you would make $3,452 on this. This is a 3.8 to 1 risk to reward ratio. So this is a pretty good setup for me. I'm looking to continue going long on the NASDAQ. If we don't come down here, down to this J2 entry, this 50% fib retracement, so be it. We missed out on the trade. We got plenty more stuff to look at. So this is what I'm going to be looking at on the S&P here, or not the S&P, I'm sorry, the NASDAQ. And yeah, we're really just waiting for price to pull back down to here. RSI is telling us it wants to. Sunday open is kind of telling us that it wants to with this bearish candle here. So we're just going to wait for price to come down to this J2 entry, and we will get into the market. Moving into the S&P 500, we got the same deal going on. Price had a fantastic end of the week last week. We moved straight to the upside, breaking this zone over here, and the moving averages are moving great to the upside. The RSI is a little overbought here, so that tells me we do want to start pushing to the downside for a pullback. So let's draw our fib. I'm going to draw from this wick right here, swing low, to the top of this candle Friday close, which is our swing high. And we're going to start drawing some boxes to see where our favorite, let me delete this one so it doesn't get confusing, where our favorite entry is. So if you look, for me, the 50 looks somewhat okay. We had a little bit of shakiness here, but pushed right through it. The 38.2, which is our J3 entry, we got some resistance, pushed back down to the downside, broke through, came back down, rejected off of it, and continued to the push to the upside, which in actual, if we draw this over to the top of this zone, this isn't a bad place to enter. So we could potentially take this J3 trade. Let me delete these now so it doesn't get confusing. Stops just below the 50. Take profit right back at the top here. So we're looking at a 251 pip stop loss for a 611 pip take profit, 2.4 to 1 risk to reward ratio, which isn't a bad trade. But I really like this 61.8. You could see that price rejected off hard over here. If we draw this over to here, we had price rejecting here. If we drew it even back further, rejection, 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 rejection. I mean, this 61.8 has just been hot for the S&P 500. So what I would really like to see is price come down to this 61.8, the J1. The reason, I'll show you why I stopped my stop loss there. There's a ray. So I went to the bottom of this candle here, which is where this wick kind of stopped off. So the bottom of this candle, I might put this just below this line. So right where this new candle started and this wick rejected, I'm going to put my stop loss just below that. So we got a 266 pip stop loss for a 997 pip take profit. So this is kind of how this is going to work for me. I'm going to take somewhat of a trial trade here at this 38.2 just to say if the market does reject off of this 38.2, we'll catch the move back to the upside. If it does not, we'll take the 250 pip stop loss and we'll get back down in here for roughly another 250 pip stop loss, but quite a big move compared to this. So we're at a 300 pip difference. So we'll take two trades on the S&P 500, whereas like NASDAQ, I really only want to see this 50 touched. The 38.2 with only the two confirmations here, it's not the best trade for me. But here we do have quite a bit of confirmation on the 38.2. Looking back over here, this wick here, here, and here. So the 38.2 looks nice. So if we can come down to here, I will get into a position. And if we hit stop loss, I'll get into another position when we come back down to this 61.8. Moving into EURUSD, with all of our bearishness that we sort of have on the DXY, the US dollar, I'm looking to go long on this. If we take a look at the moving averages, we got a cross back here, which obviously price reacted great to that cross. We moved straight to the upside. And right now we're in somewhat of a pullback here. So if we draw a fib, we got two options. We could draw the fib from this swing low to this swing high, which gives us the J3 entry, the 38.2, being a really good entry. Also, this 50 is not a bad entry either. Or if we delete all that and we draw our fib from this swing low to this swing high, we could see that we're actually in a trade right now. This 61.8 was almost hit. We are pushing down past the 50 to this 61.8. So we might get into a trade here on this to the long side. I'm going to go stops just at the top of this wick. So we're below this candle and we're sitting at the top of these two wicks. And this, I mean, this isn't a bad trade. It's only a 26 pip stop loss for 119 pip take profit, 4.5 to 1 risk reward. I'm going to get in this trade. That's why we look at things on Sundays, because we don't want things to run away from us. So let me come in here. Let's go trade EURUSD. What's my account? Okay. I got to figure out my lot size here. How big is this? 26? Okay. EURUSD. We're going to trade. Stop loss is at 1.0782. And take profit is at 1.0927. I'm not even going to put take profit, actually, because we're going to just scale out of this. All right, so we're in a long position on EURUSD. Yeah, I like that trade. I mean, the 61.8, if we were to draw this fib here, which we were just talking about, is going to be almost in line with the 38.2. It's pretty close. I mean, if we drew our stops down below this, we'd come out to a 42 pips take or stop loss. But I do like this 27 pip take profit, or I keep saying take profit, stop loss. So yeah, so we'll hope for the best. If we push down below this, then I will look to draw fibs from here to here. Our side looks like we got way oversold on this. I mean, you can see that this moving average is still hanging out up here. So I have a feeling that we will start to push off here and get our cross back on these moving averages somewhere around this 50 zone. Oh, I don't want to do that. Let's delete these. So yeah, so we're in a trade on EURUSD. Let's move into gold. Gold is starting to give us a little bit of a pullback as well. If we draw this trend line here, let's start with this wick and draw back over to here. So you can see that we've been playing off this trend line on XAU USD, which is gold. If I draw my fib, let's see where price rejected off of. So we did break below this 61.8 here. Let me bring this down so it's right on there. Okay, so we did break below this 61.8 here, but we are starting to push back to the upside. So potentially we could have missed a trade, because what we would have looked at is the J1 entry stops below this wick back here, and we wouldn't have hit stop loss. It would have only been a 65 pip take profit and a 273 or 65 pip stop loss and a 273 pip take profit, 4.1 to 1 risk to reward ratio. So we could have potentially missed out on a trade. Let's drop this down to the hour to see what we got going on. Oh, this is kind of nice. So let's see. If we enter right now, it's an 82 pip stop loss, 273. This is a 3.3 1 to 1. Oh, you know what I gotta do is we just took a EURUSD trade. So we'll come back out to the 4 hour, scooch this over. Let me make sure this entry is correct. Oh dang, we're already up. Let's go. So our entry price 1.8104. We can leave that there. Stop level is 782. Okay. All right. So let's go like this. Oh, I need to open Discord. So open up Discord and call this trade out for, I would say premium members, but right now we're running our Easter sale, so we will be free for the entire month of April until May 1st. So if you're not already in the Discord, jump in. It's free. You'll get all the information that we have. Monday through Friday, we're going to be doing a course member live streams for free for everybody. So if you are not in, you'll be able to get into those live streams for free and give you guys an opportunity to start taking some of these trades that we're sending out and start learning some of this education. So let's go save messages. Discord runs so slow whenever I have OBS Studio running. Yeah, P4X. So we're going to go buying EURUSD. Our entry is 1.08104. Our stop loss is 1.07820. Our take profit is 1.08110. So analysis. We have is it a J1? Right? We'll call it a J2. J2 entry, 50% fib retracement. Moving upside, RSI is oversold. got 41K. RSI is oversold. DXY. Downside. Let's get this chart image. Come back to Discord. Boom. All right. So the EURUSD trade is sent to the group, and we can move back on. So gold. Looking at gold here. When we drop this down to the hour, we've seen this nice bullish candle here. It looks like it wants to finish being an engulfing candle. So the way I used to trade this strategy where if this engulfing candle, or if this bullish candle here gives us an engulfing candle, what I would do is I would draw a fib on this candle right here. Oops. There we go. I would draw a fib on this candle and drop it down to, like, let's say the 5-minute, and I would get in on this 50%. So this 50% right here, which actually so happens to be our, if we come back out, 61.8, I mean, we could potentially wait for that, because if we're looking at the 5-minute chart here, it looks like we do want to have some rejection. So I don't know, we'll see. With it being Sunday and the market being so unpredictable, I don't know that I really want to get into a gold trade right now, because gold likes to move. I mean, just this candle here is 250 pips. So I think I'm going to wait on this. If it runs away from us, it runs away from us. But we'll take a look back in the morning to see what price decided to do here. Maybe potentially if we can get some rejection back down in the zone. I guess I'm being greedy right now because I don't want to wait and miss this trade. But it is what it is. We're already in a EURUSD trade. It's only Sunday. We got the rest of the week. We'll wait on this trade. Let's move on to USD JPY before I lose any money. All right, so technical analysis, moving averages on USD JPY. We did get a cross here telling us that price did want to move to the upside. You might be saying, like, okay, so why is USD JPY, if the US dollar is bearish, why is USD JPY moving up? The issue with USD JPY is not the US dollar. The issue is the Japanese yen. So we talked about on Friday how the Japanese yen, when it comes to COT data, that's the commitment of traders, they had 7,000 long positions on JPY and 70,000 short positions on JPY. So the institutional traders are very short on the Japanese yen. So although I'm bearish on the dollar right now, I'm more bearish on the Japanese yen. So what we can do is we can mark this up to look for some long positions. So if we draw our fib from swing low to swing high, we can take a look and see what our favorite entry is, which honestly, the J2, the 50, looks fantastic. Rejection, rejection, price broke through, candle ended right on the 50, next candle started on the 50, price came down, wick to the 50 looks fantastic for a long position. So let's go long on here. Stopped just below the 61.8, the J1 entry. Take profit is at the top of the Fibonacci. And this is a fantastic setup, right? We have price breaking previous lows telling us that we potentially want to continue to move higher. RSI did get a little overbought, and we got a cross back here. Although we do have a cross back here on the moving averages on just the candlesticks, we do have a cross on the RSI, which all that's telling me is that price wants to give us a pullback. So if price wants to pull back into this 50, I'll look to take a long. If not, then I will wait for a break of structure and a new spot to draw my fib and get into a different long position. But otherwise, this 50 looks like a great trade setup for me. So we're going to wait and see if we can get that. If not, we will redraw our fibs and move on. GBP CAD. Look at this gap we got. So we gapped quite a lot to the downside here. And then it looks like we might even want to continue to push lower. We are quite oversold here, but we did get a cross on the RSI, and we did get a cross back here on GBP CAD, which tells me price wants to move down. This tells me price wants to move down. But what we need is a pullback in order to get into the market. So if we can get into something like this, if we can draw our fib from the top of this swing high, because we're taking a short here, so we want to draw our fibs from the swing high to the swing low. And then if we look at this 50, you'll notice that the 50, like, yes, the J1 is my favorite trade setup, but the 50 is what I get into the most. Like, I take a lot of trades off the 50, off the J2. So what we're going to want to see is price push back up into this 50, and then we'll take a short position here. RSI is looking pretty oversold, which tells me that we want to pull back. And now we're just going to wait. So we'll take a short position on GBP CAD. Stops above the 61.8, which is 30 pip stop loss, and a 100 pip take profit. We got a 3.2 to 1 here. But here's the thing. If price continues to push down and we push down below this, we're going to just redraw fib and figure it out from there. So right now we're just waiting. This gap also kind of tells me that we do want to push back. So if we draw a little box from there to there. So this is the gap I'm talking about, where price closed here and then opened up below where we closed on Friday. So generally, most gaps do get filled in Forex. If it doesn't get filled, I might be a little mind blown, but that gap tells me that we do want to get filled. So if we come up, fill the gap at the 38.2, so be it. We missed the trade. But if we can come up to this J2 entry here and get into something, I'll be looking to take a short position on GBP CAD. So that about covers the technical analysis side of things. Let's take a look at Forex Factory and see what news we got. So the Swiss franc, don't really care about because I don't really trade any CHF pairs, but we do have CPI month over month. This is a consumer price index. It's a big measure of inflation. So Switzerland's CPI data will be coming out at 2:30 in the morning. We have the OPEC JMMC meetings. So yeah, I'm not even going to read all of that. The ISM manufacturing PMI, so this is the Purchasing Managers Index for the manufacturing industry. Actual greater than forecast is good for currency. So if we get anything over 47.5, it'll be good for the US dollar. Anything below that, it'll be good for indices. So that's what we're going to be looking at here. ISM manufacturing prices and the BOC Business Outlook Survey for Canada. Moving into Tuesday, the Australian dollar, that's AUD, or Australia, is going to be releasing their interest rates. So right now they're sitting at a 3.6. They're expecting a 3.85. If they get anything higher than a 3.5, it's going to be very good for the Australian dollar. Anything at 3.85 or lower may already be priced into the market. If it comes in lower, this is not going to be very good for the Australian dollar. But a 3.85 is pretty expected, so it might already be priced in the market for the Australian dollar. We have the JOLTS job opening on Tuesday for the US dollar, which this is going to be a big thing. So right now, so last month we got 10.82 million open new jobs, and we're expecting to get 10.49. So they're expecting some of those jobs to get filled. So if we look into this, actual greater than forecast is good for the currency. So right now, what the Federal Reserve wants to see is they want to see a slowing jobs market, because if the jobs market is slowing, more people are unemployed, and that means people are not spending as much money because unemployed people don't have money to spend. And that's not good, but it's good for them, because what that means is it's going to turn the trajectory of inflation towards the downside. So if we have a lot of job openings, this might not be good, because that means people are still hiring. And then if you take a look at Wednesday, we have our non-farm employment change. So this is the number of people employed. So if we get 208,000, so we had 242,000 last month, and then this month, if we get 208,000, this is going to be a good thing, because they're going to be like, okay, because this measures the number of employed people, like how the change in employed people from last month to this month. So if this goes down, that means not a lot of people are getting hired. That's going to be good for the Federal Reserve, which will also be good for investors, because they're looking to go long on the indices. So if this comes in low, then that's going to tell us that what the Federal Reserve is doing is working. If this comes in high, it's going to be like, okay, obviously what you're doing is not working, and maybe we do need to go short side on the indices. Now, we also have the Purchasing Managers Index, the ISM services, so this will be people in the service industry. Looking at Thursday, we have unemployment claims. So right now, the last report we got was 198,000. We're expecting 200,000. If we get under 200,000, then we might see a little stagnancy in the indices. So if you look at this, actual less than forecast is good for currency. So if we get less than 200,000, the value of the US dollar is going to go up, and the indices, S&P 500, NASDAQ, Dow Jones, whatever, they're going to come down. They're going to come down. And then we have NFP on Friday. This is a huge day because this is a big day for our employment numbers. We get our unemployment rate, we get our non-farm employment change, and we also have the average hourly earnings. So if the hourly earnings are going up, so if these are increasing, that's going to tell us that people are making more, which means they're going to be spending more, which means that inflation is going to continue to rise. The employment change, if this goes up, then that means more people are working, which is not good. And if the unemployment rate stays at 3.6 or goes down, then that's not going to be good, because that means more people are working. But if this goes up, this goes down, and this stays flat at 0.2, or if we get a 0.3, it might not be the craziest thing. But really what we want, what the Federal Reserve wants, is for all of this stuff to come out what would normally be good as bad. They want these numbers to come in like people aren't working, people are getting laid off, new jobs aren't getting created, and people aren't getting hired. So it's kind of it's a weird thing, because most of the time, yes, you would want these numbers to be good. You know, you would want less you would want less unemployment, you would want more people getting jobs, you would want the hourly earnings to go up. But right now, it's very situational because of where we're sitting at with such high inflation. So it's a big jobs week for the United States. We're also looking at employment rates for Canada on Thursday. And then New Zealand, they're going to be releasing their interest rates on Tuesday. And then the Bank of Canada's Business Outlook survey on Monday. So big week for employment and rates. So we're just going to have to kind of sit tight and hold on, because the market's really going to move this week off of all of this information. But other than that, like I said in the beginning, don't forget that our Discord is free until May. We're running our Easter sale right now, so get in while you can. And yeah, so just turning back over real quick, we're looking for some long positions on the NASDAQ. Looking for long positions on the S&P 500. We got two options here, the J1 or the J3 over here and a J1 down here. EURUSD, we did just get into a position. So we are alongside on EURUSD. Gold, we're waiting on this. Look, we just started a new candle and we came and bounced off this 61.8. So we may have just missed another position here. But with it being Sunday, I'm okay with missing a trade on gold. USD JPY, we want this to round over. Like we talked about earlier, although we want we're bearish on the US dollar, we're more bearish on the Japanese yen. So we are looking for long positions on USD JPY and GBP CAD. We are looking at short positions. If this breaks through, then we're going to sit and we're going to wait for another area to draw our fib, wait for a pullback to get into something. But other than that, we are looking for short positions on GBP CAD. So thanks for watching. Don't forget to subscribe to the YouTube channel and hit that bell so you don't miss anything. Leave a like, leave a comment. It really helps us out. If you have any suggestions or questions, or you want us to start looking at certain things, let us know. If you let us know in the comments, we're going to look at them. Thanks for watching.